Hello, I'm Terry Clemens, Executive Director of the National Consumer Reporting Association, and welcome to our Man on the Streets Credit Education video series. Founded in 1992, NCRA represents the specialty consumer reporting agencies that provide the credit reports required by mortgage lenders and property managers for making residential lending and leasing decisions. In these videos, you'll not see professional actors, but random Americans visiting iconic destinations with credit reporting and scoring questions. The answers are provided by NCRA members, each of whom have experience ranging from 15 to more than 40 years of employment in the consumer reporting industry. Without further ado, let's hit the streets and hear what these consumers want to know.
Hi, I'm Major Berman with the Mortgage News Network. We're here in Times Square, New York, reporting for the National Consumer Reporting Association. I'm here with my friend Lisa. Lisa, you have any questions for the experts about credit?
What are credit scores? Why are they important and how do they get calculated?
Credit score is a 3-digit number that predicts a consumer's credit risk. It's important because lenders, landlords, lots of companies use them. And every company that makes them calculates them in a different way, but they're all based on the same kinds of factors. So if you have a high credit score from one company, you probably are going to get a high credit score from all of them. Getting more into the credit score, it's a statistical model. And what it's predicting is whether a negative credit event is going to happen within the next 2 years. Being 90 days late or worse on any credit account, having a collection account, a lien against income or assets like a tax lien, bankruptcy, or a court judgment against you.
The past 2 years, the past 24 months are probably some of the most important because if you are late, have a 30-day late or something like that, that's going to kind of lower the score.
300 to 850 is the official range. Nobody really gets exactly a 300 or an 850 because that's just the theoretical range of scores, but higher scores are better, and scores close to 850 are the best ones.
There's not just one score model, so there's hundreds of models out there. We deal with the mortgage lending industry, so our score ranges, well, all the ranges are the same, but the models are, just think of it, it's a larger risk for someone to lend money to buy a house because it's more money. The mortgage model, you might get a 700, but then if they go to pull your credit, say for auto or something like that, it might be a 720. So there's a little bit of a range difference there.
There's two major makers of credit scores. One of them is FICO. They've been around since the 1950s. The other is VantageScore, and they came about just 10 years ago, where the three credit bureaus created a joint venture to try to compete with FICO. But they both have the same kind of range, and they're both based on the same kinds of factors. And the factors that are important in calculating a credit score for anybody really are, first of all, payment history is the most important thing. Whether there have been late payments, how many accounts they've been on, how recent they have been. Then there's balances compared to credit limits or balances overall, but especially as a percentage of credit limit. Length of credit history, the longer the credit history you've had, the older your accounts are, the better. The credit mix is the next most important thing. So that's what types of accounts you have. The more you have, the better, except that you should avoid personal finance company accounts. And then finally, new credit. So that includes what a lot of people have heard of as credit inquiries. So that's applications for new credit. Those appear in the credit report as well and are used in the credit score, but that's actually the least important thing driving the credit score.
Good information. Thank you.
I hope you enjoyed that video and it helped you understand more about the consumer reporting industry. Thank you to the NCRA Education and Compliance Committee members who worked very hard to produce this video series and also events all year long for NCRA members to help them be better stewards in the consumer reporting industry. A special thanks goes out to Peter Fitton from Credit Expert and Julie Wink from DataFacts, the members who provided the answer to that question. Special thanks also to the professionals at the Mortgage News Network who produced this video series. If you're a property manager or a mortgage lender and would like to obtain consumer reports from one of the industry's best providers, go to ncrainc.org to locate a member near you.